taxable year, you must choose your filing status that accurately matches your circumstances. Now, your filing status can change based on major life events like getting married, having children, or having a home with a dependent under you. Your filing status can affect certain questions. The first thing is whether you must file a tax return at all, or how much taxes you may owe based on your filing status. What are the credits that you can claim, or what are the standard deductions that is allowed to you during the tax year. You have 5 major filing statuses available to you. You may file as single, you may file married filing jointly, married filing separately, qualifying widower, or head of household. Now, you must choose a filing status that gives you the lowest taxes due or the highest refunds. December 31st decides your filing status. So December 31st is a significant for IRS filing because this is the last day for the year for the individuals. This date determines various tax implications like all your income earned by you by December 31st must be reported on your tax return. Any deductions or credit by December 31st to be claimed by the individuals for the year, such as charitable contributions, and also any tax planning with regards to deductions or credits must be claimed on or before December 31st. All the returns typically are due by April 15th of the following year. You have a filing status which is called a single. Now, single is a filing status, a taxpayer who is unmarried or legally separated by a divorce agreement on the last day of the year. So let's say you are a single at December 31st, then your filing status should be single. Why would somebody file separately? Now, married couple can file separately. Now, this is a filing status where each spouse files their own separate returns. They usually take 50-50 shares of their income and other deductions and credits, except for wages and salaries, which must be taken actually. Married filing separately may be an appropriate option if there is a lack of trust between spouses. Now, this happens because generally both partners must be consenting to file a joint tax return. So filing separately can help if one spouse suspects the other spouse of any tax evasion or misfiling of tax documents, since each of them would be jointly and separately liable for joint returns, and therefore one spouse's mistake may affect the other spouses in the future years. The most beneficial filing status for a married couple would be married filing jointly. This would allow them to get higher credits and other beneficial tax treatments. You could choose married filing jointly even if one of the spouse died during the year. For that year, the surviving spouse can still choose married filing jointly. This would be also an option for spouses living apart, though not legally separated by a divorce agreement. In the year of death of your spouse, you can still file married filing jointly for that year. Now, after 2 years from the date of death of your other spouse, you can file or you can choose a qualifying widower status, provided you did not remarry and you maintain a home with a dependent child for the whole year, and you provide the cost of maintaining home for at least 50%. Now, this option is given to you for 2 years after the year of death of your other spouse. Now, after that, if you're still unmarried, you can have a head of household status. Head of household is a filing status who is considered unmarried at the last day of the year, who maintains a home and provides more than 50% of cost of maintaining that home, and who has a qualifying person living with the taxpayer's home for more than half of the year. Now, if the qualifying person does not stay for the whole year or half of the year, that's still fine. Temporary absences are okay as long as one of the qualifying person is basically attending college. Now, we also have an exception with dependent parents. They are not supposed to stay with the taxpayer for at least 50% of the year as well, as they may be in old age home, as long as the taxpayer maintains the household that parent lives in and providing more than 50% of the support of the household. The parent can be claimed for the taxpayer for the head of household status. Now, parents are not supposed to be staying with the taxpayer, but qualifying persons may live with the taxpayer for more than half of the year. Who is considered unmarried for head of household status? There are some instances where a taxpayer can be considered unmarried for tax purposes only. To be considered unmarried, at the end of the last day of the year, the taxpayer must meet all of the following conditions: file a separate return from their spouse, pay more than half of the cost of keeping up the home for the tax year, and maintain a home as the main residence of the qualifying child, stepchild, or foster child for more than half of the year. Do not live with the spouse in the home during the last 6 months of the tax year. Be able to claim an exemption for the child. The considered unmarried rules apply in determining who can claim the child for dependency and head of household purposes. A couple, if not formally separated or divorced, may still apart for more than half of the year for either spouse to claim head of household status. Let's see one example. Charles and Diana are physically separated on February 10, 2023 and have lived apart for the remainder of the year. They do not have a written separation agreement and have not filed for divorce. Their 6-year-old daughter, Emma, lived with the father for the whole year, and Charles paid more than half of the cost of keeping up the home. Charles can claim Emma as his dependent because he is the custodial parent. Charles can claim head of household status as well. Although he is still married, he can file a head of household because he meets the requirements to be considered unmarried. We need to understand special rules for non-resident alien spouses. A taxpayer who is married to a non-resident alien may elect to file as head of household by disregarding the non-resident alien spouse. Now, this would be true even if they both stay together throughout the year. This is a unique rule that only applies to taxpayers who are married to non-resident alien. Now, the taxpayer must also have a qualifying child to qualify for head of household status. Remember, a US citizen or resident who is married to a non-resident alien must have another qualifying person in order to disregard the non-resident alien spouse to be eligible for head of household status. If a child was born during the year and also unfortunately the child has died during the year, a taxpayer may still file as a head of household as long as the taxpayer has provided more than half of the cost of keeping up the home, which was the main home for the child who has born and died during the year. Let's see one example. Peter is unmarried. His parent, his father John, whom he claims as a dependent, lived in an apartment alone. John died on September 2. The cost of upkeeping the apartment for the year until the parent's death was $6,000, where Peter has paid $4,000 and his sibling Mary has paid $2,000. John had no other income. Because Peter paid more than half of the cost of keeping up his parents' apartment from January 1 until his death, Peter can now claim John as his dependent and his filing status would be a head of household. Let's understand the filing statuses in a detailed manner now. Let's say a person was single in 2018. He got married in 2019 and he can elect to be filing as a married filing jointly or married filing separately for that year. During 2020, they have gotten a kid, so now they are parents. They can choose to be married filing jointly or married filing separately in 2020 as well. In 2021, one of the spouse dies, the wife has died. That year, the surviving spouse, the husband, can still file married filing jointly. As long as he maintains a house for this dependent child for 2 years, another 2 years, 2022 and 2023, he can still file qualifying widower status. Now, this is only allowed for 2 years after the year of the death of the spouse. Now, on the third year, as long as the husband has not remarried again and still providing more than 50% of the cost of keeping up the home for the child dependent, he can choose to be a head of household in 2024. As we understand, a single individual has to file a Form 1040 for reporting his taxes. Now, who exactly must file? As we discussed, different filing statuses such as single, married filing jointly, married filing separately, head of household, or qualifying widower. We have certain standard deductions which is allowed every year. Now, these standard deductions are adjusted for inflation every year. As long as your income is greater than those standard deductions, you must file 1040. Let's say you are a dependent for another person, you may still need to file as long as your unearned income is more than a certain threshold during the year. A self-employed individual must file taxes if their self-employed income is of a small amount adjusted for every year. For the current year, you see that it's $400. So when is the due date for filing 1040? You must file 1040 by April 15th since you are a calendar year individual. You could also make an extension form. To get your extension for filing, you get an automatic extension for 6 months. Now, please note that this extension is only for filing and not for the payment. What if you have made a mistake? You can still file a 1040X. This is an amended return for correcting any of the errors or claiming a refund that you would require. Now, you should do this 1040X within 3 years from the original due date or 2 years from the actual payment. We also have certain statutory deadlines for filing. As we said, this is going to be 15th of April. Now, if you do not do this, you may still have a filing penalty of 5% on your outstanding tax liability. And if you do not pay this, you would have a 0.5% penalty.